Happy Father's Day. I'm gonna be talking about the trade recap I took on Friday. So I decided to take a trade on Tesla. It was actually a loser. So we're gonna be recapping a little why I decided to take this trade and what could have I done better. So this play could have actually worked out. So let's get into the bigger time frame analysis. So we have seen the last couple of days, weeks, I would say, ever since like the beginning of 2021, Tesla has been getting beaten down, and now we're like in the low 600s, right? So, but in the last couple of days, we've been seeing that Tesla has kind of double bottom, and then it's starting to make higher highs now, and so that's what I was looking at, and I realized on Friday we broke this wedge, um, and with nice volume. So when we go on a smaller time frame, 5 minute time frame, you see we have nice volume once we broke this trend line. Very concisive volume throughout the whole move. But I missed this first breakout, and then I decided to wait for a pullback and then see if I could catch any um, on the upside. So let me just pull up where I have it. So here, alrighty. So here we see that for the past couple of days, Tesla has been creating nice demand. We have a 1 hour, then we had created a 15-minute demand zone right after here. We had a nice rally, explosive rally through the trend line we were watching, nice volume, and then we were based out for 15 minutes, and then we rallied higher. So I was like, okay. And why I decided to take this trade was because it was congruent with a key level, a 624 key level. So now in my mind, I'm like, all right, cool. If we can hold this 15-minute demand zone and we can see some momentum in the upside, I can potentially take this trade long. So that's what I did. I was watching the break. We're going smaller time frame, like a 1 minute, 5 minute. We see we have a nice trend line. Um, we have Tesla's fallen for the last couple of, I'll say, 45 minutes, and we're still holding value in the 15 minute, even though we broke it, we dipped below it, we got bought back up. So here I'm watching it, right? So my initial entry should have been at the break of this trend line, which I failed to do because I was watching other stocks, and then when I got the alert, um, which triggered, I had already missed the first initial move. So here, let me go on a smaller time frame. As you guys know, I've been using 1 minute more. So here would have been the optimal trade. So an entry around 11:01 with this nice explosive candle, um, expecting to see around 624, but I failed to do so. So at this point, I was just watching, and I didn't want to pay overpriced premium. So I decided to wait for a period of consolidation, which happened to be a 4 minute period. After 11:01, we Tesla consolidated, and I saw that we had a 624 key level, and then we kind of created a smaller wedge, 4 minute wedge, and then on the break of this candle, I decided to take on this trade because one, volumes was very intense and didn't die down, and I saw buyers were able to keep up Tesla higher. And then when we saw a pullback, we saw the volume really decreased a lot, almost by half. So that gave me a confirmation the sellers are not really looking to sell this and bring this lower, and buyers are stronger. So I got in at the break of this candle, and I feel my mistake was here that I decided to mark order, and with TOS fills, and I was playing Friday's expiration. I ended up overpaying like 10%. Yes, once I entered the position. So right off the gate, I was down on my position because I marked the order. So my premiums at one point, I believe they're going for 207, and then I paid 230. So I had to pay almost a 10% higher price just because I marked order and TOS fills are not their best. So even though I tried market ordering right after like the 1 minute had opened, because I saw nice volume coming in, as you can see on this candle, we have nice explosive volume. I was like, all right, cool. Looks like we might actually make a leg higher. So I got in here, and then the reason why I held through this consolidation period was because um, the 624 level was being respected and it was being held nicely. So during the whole period, I was like, all right, cool. Possibly Tesla can hold this value and we can go higher. So, and if we look at a higher time frame, it seemed like we were holding this level no problem until this 10-11 candle came up. We saw high sellers, right? We seem to see no buyers. Buyers were still there, but sellers seemed very aggressive. So I was like, all right, cool. I got in at the break of this 5 minute trend, 1 minute trend line. Now I was like, all right, I'm gonna get out if I see a close below this 624 key level, which I did. And in my opinion, I feel like even though this was a loss, it was pretty good execution on my end. Just because let me go on a smaller time frame. Yeah, so I got in at this candle and I ended up getting around the 11:20 candle. Even though I pay over premiums, overpriced premium, and I still managed to only take a 26% loss. Even though it's a pretty big loss, I would say. Yes, given the context, I would take this trade because one, we had nice volume continuation, and then uh, buyers seem to be very strong and responsive at this key level. The only things, the cons against this trade was that I one Nasdaq was very choppy on Friday, so that's one take giveaway that I could have avoided and been more cautious on this trade. Also, was very choppy after having sold off pretty aggressively the day prior. So very choppy price action on Friday, and then Nasdaq seemed the same. So there is no really type of reason why I want to take this trade. Plus, we had triple witching the last past Friday, so premium. It was just a they're just trying to kill premiums the whole day, which you can clearly see that Nasdaq didn't move at all. So one thing I could have done better on this trade was that instead of me buying the same day expirations, I could have bought next week expirations, and I could have avoided a small. I could have made this loss way smaller, you know. And also, if I would have initially got in at the break of the first trend line break, could have broken even or even made money on this trade because I got in prior to the anticipated move. But because I was watching other stocks, I failed to recognize this. But even though I took this loss, I'm actually now becoming, I would say, less attached to the money aspect, even though this week was a pretty red week for me. I was pretty calm throughout this whole trade because I was so focused on what the charts were telling me, and I wasn't focused on, oh, I'm down $50, I'm down $100, I'm down 200. I didn't really care. I was like, all right, fine. I'm willing to take this loss if my analysis is wrong, you know, which was. And I can show you actually why my analysis is wrong. I actually have, there is a 2 hour, see, there is actually a 2 hour I failed to seem to recognize. Let's go on the 2 hour. Yeah, so right here, right we're almost at the key level. I failed to recognize there was a 2 hour supply zone. Um, for some reason, maybe because it was a very small supply zone, I failed to see it prior to me taking the trade. But this was the reason why Tesla couldn't move any higher, just because we had supply right there. So let me just go on the smaller time frame. So you see, right, we have a 2 hour supply zone. So we did rally through it very strong. We rejected. We went a little wicks, ticks up higher than it, but then we got rejected right off of it. So this was the reason why Tesla couldn't make a higher high, you know. But just according to my analysis, the key level, we had nice volume coming in, trend line break, very simple analysis, nothing too complex. But yeah, so I'm gonna end it here. So hope you guys learned something from this trade, and hope you have a great rest of your week and you start Monday fresh and you have a great rest of your week. Have a good one.